Hey guys, and welcome to the Working Money Channel. So Bitcoin goes up, Bitcoin goes down. Right now, Bitcoin's trading at about $35,300 per BTC. And, we were getting excited after we were seeing this climb for Bitcoin. We were thinking to ourselves, is this going to bring the rest of the alt market upward? Then we saw a bit of a decline. I was a little optimistic that we were seeing higher lows, and I was waiting for those higher highs. We came up a bit, and now we're making lower lows here on the micro trend. What is going to happen to Bitcoin? How long is this going to continue moving sideways? Now, it's an interesting question because in the past, we have seen the same kind of market structure for Bitcoin, or rather the same kind of patterns when Bitcoin has corrected in a bull rally. If you look at this every single day, you're going to drive yourself crazy, especially if you're not an advanced trader. But if you look to the past, you can see Bitcoin has made similar correction patterns. And I just want you guys to take a look at these real quick. I'm going to look at this one, this one, this one. And I think that's all I'm going to look at. These are three great examples. You guys can see the pattern structure, very, very similar to what's happening now. And if you just take a look at these, let me zoom in on some of these. You guys can see, I'm going to take this one first. This large wick and tail is an anomaly, so I'm going to ignore that. But if you take the top of this and bring it across all the way to where it retraced back to that same top, it took 54 days, or rather 54 bars. I have this on the daily, of course. 54 days to see Bitcoin retrace back to its all-time high. That was for that particular pattern in early 2017. We know 2017 was a bull run year for Bitcoin. Over here, we have a similar kind of outlook. It did touch over here, but then it really didn't shoot back up until 55 days later. So there you go, 55 days over here. And what do we have over here? We have the top over here. And this one, getting closer to this all-time high, took less time. So the further away we were from the all-time high, the longer it took. And you guys can see, I was going to show you guys some of these examples too. And I don't think that this is going to be necessarily a good example to look at, because Bitcoin needs to ramp up, okay? And so I think as we get closer and closer to the top, we are going to see this number decrease. But right now, I feel like we are kind of in the middle somewhere. So I wouldn't be surprised if 54, 55 days later, we saw Bitcoin retrace. It wouldn't be an unusual thing to see on the chart. And how many days has it been, really, since we've seen Bitcoin hit its all-time high? Well, it's only been, right over here. It's only been 9 days. And if we brought it to 55 days, guys, I don't know if you can see down there, that would bring us to early March, March 4th, 2021. So another month and a half to go. That's not to say that that's going to happen for sure, but it's just something that I noticed on the chart that you guys might be interested in. And the reason I'm still positive on Bitcoin and the rest of the crypto space is, of course, because we are seeing big money still pour into this. This from Michael at Val5 Links. He writes, however, January 16th saw this value almost double as GBTC added 5.13K Bitcoin to its bag. So this has to do with Grayscale's Bitcoin Trust reopening, and they are adding more Bitcoin. Bitcoin's price was stumbling to lower levels after it hit an all-time high of 42,000. The largest digital asset managed to retrace its steps to 38K recently. But this was an opportunity, guys, for Grayscale to add to its bags. As you can see from this chart by Bipt.com, they had closed down the trust over the holidays, and now they are adding again to the Bitcoin Trust. The above chart indicated that after a gap of almost 20 days, Grayscale Bitcoin Trust added even more BTC. Although the previous buying was more than the current, the price of the digital asset has also increased significantly in the meantime. So these guys are adding over 5,000 more Bitcoin specifically to their Bitcoin Trust because they're realizing this is just the beginning of the game. This isn't over yet. Gives me a lot of confidence in Bitcoin and the rest of the crypto market. I also saw this, guys, from DJ Peter Vass. Flare XRPL fork to be supported by its first hardware wallet. So Decent Hardware Wallet was among the first to support the airdrop of Spark FLR tokens to XRP hodlers. Now it announces support for Flare testnet Costin and Flare-based applications. Flare is welcome on Decent. Minhu Yu, co-founder and chief strategist of Decent Hardware Cryptocurrency Wallet, has shared plans to support Flare blockchain natively. In particular, the testnet faucet for Flare's Costin sandbox environment will be added to Decent's mobile application. The new feature can be activated both the hardware wallet and in-app wallet mode without a connection to the Decent device. Therefore, Decent will be useful for Flare enthusiasts to try its main features in testnet mode. So more developments here for the Flare network, and Decent wallet, one of the first hardware wallets now supporting the Spark token. So we're seeing some more developments with regards to Flare, the Flare network, and of course, by extension, the XRP community does benefit from this as well. So thanks so much to DJ Peter Vaz for posting that. I also saw this, guys, from the Cryptic Poet. Bluegate announces VeChain integration with Madini in Africa. And so what Madini means is minerals in Swahili. Madini Africa is a marketplace for purchasing, selling, tracked, verified metals and minerals and related services from Africa, developed in Kenya by Bluegate Business Solutions Limited. It aims to represent the best for all in the African industry, including miners, refiners, traders, manufacturers, designers, makers, as well as retailers. And our vision is to build transparent mineral supply chains, regulated transactions, and people responsibly lead by example across the sector towards greater ethical sourcing, trust, and sustainability. At Madini, we believe VeChain has the potential to powerfully disrupt many aspects of how mineral markets work and provide trust, transparency, and security to the supply chain. So yet another application for the VeChain Thor blockchain technology. This is what VeChain does: tracks products, minerals, basically can track anything on a supply chain. If it's going from point A to point F and there's B, C, D, E in the middle, sometimes it can get very difficult to track products, especially if you're dealing in large volumes. And this is where VeChain comes into play. And now they're being integrated with Bluegate Business Solutions in Africa for tracking minerals and metals from the beginning to the end. So great development there for VeChain. Got to thank the Cryptic Poet for posting that. Just want to remind you guys too, I do link everything in the description. So if I am going too fast, or if there is something else you want to look at or research, you do have all these articles available to you. I did also see this, guys. TIMDRAPER tweeted this out. Article on what to expect from the SEC with regards to Bitcoin. Now, we know Gary Gensler. He's the new guy that's going to be in charge. Some of us realize that Gary Gensler, although he understands Ripple and XRP specifically, he's also said that he thinks XRP is a currency in his view, but he is going to leave it up to the courts to decide. I did a video on Gary. I'll link it up here in the top right-hand corner when this news broke, if you guys still haven't seen that. The thing we have to remember here is the bigger picture, guys, and not so much the minutia of what's going on with Ripple and XRP. Of course, that is going to set an example for the rest of the crypto space, and I think in part, Jay Clayton wanted to use Ripple as that example to open up the floodgates. And you know what? I've always called it a silver lining. I think that this is really going to give the clarity that the United States needs in order to move ahead with this. But let me read you a little bit of this article just to give you guys some more context here. So Gary Gensler's expected nomination to lead the U.S. Security and Exchange Commission is seen ushering in an era of greater federal oversight of the $1 trillion crypto market cap. Gensler, who has most recently taught about cryptocurrencies and their underlying technologies at the MIT Institute, previously chaired the Commodity Futures Trading Commission and was a partner of Goldman Sachs Group. Of course, in talks and editorials over the past several years, he's advocated for a nationwide way to register and monitor cryptocurrency exchanges instead of leaving oversight to the states. So he is looking for a federal rule for all cryptocurrency exchanges in the United States to be regulated on that federal level. That could have implications for online exchanges like Coinbase, etc. And it also goes on to say the SEC is also likely to continue to go after thousands of initial coin offerings, as Gensler has said he believes that most of these digital tokens are unregistered securities. So there's the initial coin offering thing, which I think is going to be the big thing that he focuses on. It is good to have an ex-banker in there who is smart enough to recognize the value of Bitcoin and other cryptocurrencies to building wealth and value in society. This coming from TIMDRAPER, a billionaire venture capitalist who is a large investor in cryptocurrencies. He will understand the importance of allowing innovation while watching over banks who might try to restrain trade by blocking the use of a superior currency. In a 2018 Bloomberg television interview, Gensler said that the pure cash cryptocurrency like Bitcoin would need more protection. The world's biggest cryptocurrency by market cap quadrupled quadrupled last year and has continued to surge in volatile trading since the start of 2021. Here's what he said in 2018. If we get broader adoption, if we really think the crypto world is going to be part of the future, it needs to come inside of a public policy envelope. That means that we need to guard against illicit activities, and yes, we need to protect investors. The crypto exchanges, big exchanges like Coinbase, need to come within the SEC or the CFTC. Greater oversight could lead to greater mainstream adoption, he said. And I think one of the bigger points here is that, I'm going to read you this quote, and I think this is still from this is from Nick Carter. Gary is extremely dialed in on the crypto markets and understands them extremely well. This coming from Nick Carter, co-founder of researcher at Coinmetrics. If his stated views are any indication of his priorities as commissioner, I would expect the SEC to continue with or even accelerate its agenda to discourage unregulated securities issuance in the form of tokens. So ICOs, it sounds like ICOs are going to be the biggest target for Gary Gensler and those at the SEC, making sure that firms are not using ICOs as securities to help fund the company. And again, the Ripple case and deeming XRP a currency or a security, that is going to give tremendous clarity and I think set a precedent for the rest of the United States to either hop on board with certain cryptocurrency companies or leave them behind. It's a shame that we've had to come to this point in order to get this clarity, but this is very interesting. I'm curious to see how this all shakes out. I'm confident that Ripple's going to succeed. We know that they have the partnerships, and we know that they've been working at this for a while. This from Michael at Val5Links on Twitter. Jamie Dimon has watched while a new breed of fintech players led by PayPal, Square, and tech giants around the world have exponentially grown users and market value. So Jamie Dimon called Bitcoin a Ponzi scheme back in 2018, said it was pure crap, and he's changing his tune, at least with regards to the crypto market, or rather, I'm not going to call it the crypto market. It's big fintechs taking over banks. Of course, they're going to be using blockchain technology, and this is the differentiation that we've wanted from the beginning. But listen to what he has to say down here. JPMorgan Chase CEO Jamie Dimon has watched while a new breed of fintech players led by PayPal, Square, and tech giants from around the world have exponentially grown users and market value. His message to the management team of his $3.4 trillion banking Goliath is to be frightened. Absolutely, we should all be scared shitless about that, Dimon said on Friday in a conference call with analysts. We have plenty of resources, a lot of very smart people. We've just got to be quicker, better, and faster. As you look at what we've done, you'd say we've done a good job, but there are other people in the space who have also done a good job. So quicker, better, faster. Relating that to a cryptocurrency, just as a sidebar, XRP moves money quicker, cheaper, more efficiently. Some may say better. Dimon's blunt assessment was in response to questions from analysts, including Mike Mayo from Wells Fargo, who pointed out that with rich tech-like valuations, fintech players have trounced the traditional banks in recent years. And so, yeah, he's seeing that the writing is on the wall now, maybe a little too late. Of course, he shouldn't be surprised. Ripple has been forging partnerships for years now. They are going to be the bank's saving grace, whereas Ripple was once seen as, oh, we should be scared of this company. They deal in cryptocurrency. They're not the enemy, JPMorgan. They are your ally in order to integrate the old system into the new. I'm glad to see that Jamie Dimon is finally seeing the light. And despite this, guys, it still seemed like the world isn't terribly close at adopting a global framework. I saw this from DJ Peter Vass. About 40 central banks, overall it's about only 23%, can legally use digital currencies. This coming from an IMF report. Just wanted to read you this. Researchers at the International Monetary Fund have examined the central bank laws of 174 IMF members to answer the question of whether a digital currency is really money. They found that of all the central banks studied, only about 23% or 40 central banks are legally allowed to issue digital currencies. So they published a blog on Thursday exploring whether digital money is really money in the legal sense. And of course, you got to remember, every single country's got their own rules about this. So based on what their particular rules are, only 40 central banks or 23% are allowed to do this. The post is authored by Catalina Margulis, a consulting counsel in the IMF Legal Department's Financial and Fiscal Law Unit, and Arthur Rossi, a research officer in that same unit. Expressing their own views, the authors began observing that close to 80% of the world's central banks are either not allowed to issue a digital currency under their existing laws, or the legal framework is not that clear. They continued by saying, to help countries make this assessment, we reviewed the central bank laws of 174 IMF members and found that only about 40 are legally allowed to issue digital currencies. So in 16% of those cases, the law is not clear, and the remaining 61%, the law only authorizes issuance of banknotes and coins and not digital currencies. Yet, here's what a Twitter poll suggests. Prior to the publication of this blog post, the IMF set up a poll on Twitter asking people, so just the general public, to vote on whether they think digital currencies are really money. Out of 95,256 votes collected, 79.9% said yes, indeed, cryptocurrency is money. So we have this dichotomized view. The old system with old rules, only 23% of the current banking legislations coming from central banks are suggesting that, yes, we can disseminate CBDCs as our laws sit today, yet the majority are either unclear or they say, no, we cannot. So this means that a new framework needs to essentially, not just in the United States, but all around the world, needs to essentially be provided in order for the world to have that clarity. And I have a feeling, some countries are jumping on it sooner. They're readjusting so that they can be part of this new financial system. Some countries just sitting back, waiting to see what other countries do. And, I'm sure there are a lot of things that are happening somewhere in between those two extremes. Meanwhile, this is all happening as American Express, guys, a Ripple partner, a confirmed Ripple partner, is questioning the idea of a global digital reserve currency. And this from XRP Yo-Yo on Twitter. Got to give him credit for this tweet. So let me read you guys this. American Express discussions about a possible replacement of the dollar as the world reserve currency have until recently tended to center on existing national currencies such as the euro and the renminbi. But now a new contender for world reserve currency has appeared. Digital currency or cryptocurrency. So what they are talking about here is not a currency that is tied to one specific country. They are talking about an agnostic currency. Proposals for a world reserve currency broadly fall into three types. All are digital currencies, but the proposals differ in what they are. So one would be dependent on central banks, one would be issued by central banks, and another would be entirely independent of central banks. Many people interpreted Facebook's proposed Libra coin as an attempt to introduce a new global settlement currency, though many were skeptical that it wouldn't work. In Libra's case, the proposal was to back the digital currency with the existing reserve currencies and assets, principally the dollar, so its value would be dependent on central banks, especially the U.S. Federal Reserve. In such an arrangement, the dollar and other reserve currencies would potentially remain as world reserve assets, but international settlement would primarily take place using the digital currency. So Facebook was trying to position themselves to be able to do this. Of course, many countries were not game for that. As we heard back in mid-2019, I believe that was around the time Facebook was in court talking about this. Governments and regulators around the world were alarmed that a private sector organization could issue a major international settlement currency and manage a large proportion of global transactions. Let me read you what Benoit Cœuré says down here, guys. The responses to cryptocurrencies and to stablecoins are not necessarily about issuing your own digital currencies. This coming from Benoit Cœuré, of course. The whole discussion is a useful wake-up call for the central banking community, and it makes us understand that we have got to be faster and we have to go to step up upgrading our payment systems. If that is not a call for RippleNet integration, I do not know what is. One outcome of the discussion might be to accelerate the pace at which international payments using existing central bank systems move to real time, 24 hours a day, 7 days a week. Of course, we know this is already occurring on some systems with RippleNet. Such private sector digital currencies backed by safe haven currencies, principally the dollar, might ease liquidity pressures in international payments, but would be unlikely to reduce the world's demand for safe assets. There could still be a shortage of safe haven currencies and assets denominated in those currencies, particularly the dollar, especially in times of economic uncertainty. This would tend to keep their exchange rates strong. So liquidity pressures, this a big issue too. Of course, Ripple, we know, have gone on the record saying we want to make XRP markets as liquid as possible because that's how the network is going to thrive. First with cross-border transactions, basically doing exactly what this problem is outlined as here, and then moving into different sectors. Down here it talks about how some central banks around the world are already experimenting with this. However, some central bankers seem to be looking further ahead. In a recent speech by Mark Carney, governor of the Bank of England, he commented that the dollar's dominance in effect prevents the rest of the world, and especially developing countries, from controlling their own monetary policy. He argued that technology could be used to solve the problem of dollar hegemony, but he warned that simply creating a digital version of the dollar would not solve the problem. So essentially, a CBDC tied to a specific nation is basically just a digitized version of the same problem. He goes on to say when change comes, it shouldn't be to swap one currency hegemon for another. He said any unipolar system is unsuited to a multipolar world. We would do well to think through every opportunity, including those presented by new technologies, to create a more balanced and effective system. So, an agnostic cryptocurrency not tied to one nation that basically has the liquidity to provide valuable transactions across borders. That to me sounds, and I'm being very objective here, guys, even though I am very partial to XRP, that sounds to me exactly like XRP. I'm going to move down here. Of course, I will link this in the description of the article if you guys want to read further. They talk a little bit about Bitcoin and this idea that Bitcoin is a good idea in theory. However, it has already been proven that it is very difficult to scale. It just doesn't scale, right? Transaction fees are high and the network is slow. They talk a little bit about Bitcoin's fixed supply at about 18 million have so far been mined, and the total possible number of Bitcoin is only 21 million, which makes it an interesting choice as a world reserve currency. And we know, guys, as well, XRP has a finite amount, 100 billion XRP tokens. Of course, more tokens than Bitcoin, but it is a finite amount. And the point here being that you can't just print more of it. This is what causes instability in markets, and this is part of why we have the problem we currently have with monetary policy globally and the current world reserve currency. So this put out by American Express, and I know some of you guys might not know this, American Express has teamed up with Ripple. That's right, this was back from 2017. American Express and Santander team up with Ripple for cross-border payments via the blockchain. So these guys have already been working with Ripple for over 3 years now. They know RippleNet technology. They understand what Ripple is doing. Of course, I'm not saying that XRP is going to be the global reserve currency, but it sounds like American Express would champion it if it was a contender. Let's also not forget what Mark Carney was saying, okay? The head of the Bank of England, the governor of the Bank of England, rather. Mark Carney, the governor of the Bank of England, and back in July, the Bank of England picked Ripple partner Accenture to create a payments network. So we know there is a connection to Ripple and XRP in the Bank of England as well. The FCA in England has also deemed XRP a currency and not a security. That we know is clear as well. So what does this mean for the future of XRP? Well, I've got this from the crypto bull. Alt season hasn't even started yet, and I'm already seeing the same narrative that made people lose all their money in the last bull run. Switching gears a little bit to the bull run, but I think it is important to note as well, but I could make more money jumping on a green candlestick. This is a quote. The most money an investor can make are those who stay put. XRP, baby. And I guess we can tie this into the fact that XRP and Ripple, the company, have a very bright future ahead of them. We just have to be patient. Right now, I know you guys are getting excited about this altcoin rally. This is the total 2 altcoin market cap here I have on the weekly. And if I bring up the price range, we can see the altcoin market has gone up almost 800% since that March low when the markets crashed. It's gone up 770%. When you compare that to XRP, of course, we had the lawsuit bringing XRP price down. XRP was on a rise, but that lawsuit really hindered the momentum of XRP. We've got XRP in comparison. It is an altcoin, only up 140%, give or take, compared to the rest of the altcoins, which are up 770 on average. So a very good opportunity to buy a very undervalued cryptocurrency. And let's not forget, those with the most profitable portfolios tend to stay put. Think about it. If you were fortunate enough to buy Bitcoin at the price that XRP is at today, back in the year 2009 or 2010, and you had the same amount of Bitcoin as you do XRP, you just let your portfolio ride for 11 years, wouldn't you be a happy camper? That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.